would you want to make your wealth? To make money very fast and lose it fast? Or would you like to accumulate wealth that never goes away? Let me make my point with two examples. I am sure many of you have heard of Warren Buffett. He's one of the world's wealthiest investors. It took him 55 years to make his first $1 billion. But how many of you have heard of Jay Walker? Jay Walker launched Priceline.com during the dot-com bubble. His first billion of a year or less was suddenly lost when the bubble burst. He instantly jumped from zero to billions and then back to zero within a very short time. But as for Warren Buffett, many investors continue to draw inspiration from him. His billions will never disappear. I know you want the type of wealth made by Buffett. That's the type of wealth built by wise investors. Before I continue, please make sure you watch this video until the end and do not skip any part so that you don't miss out the best information that could potentially change your life. Also, please give it a thumbs up. Don't forget to subscribe and turn on notifications. To make money that gives you financial freedom, you need to know the rules of money. Money is a game, and the game is challenging, ruthless, and competitive. Some people think it's all about working hard, but hard work without working smart will leave you poor in the end. You need to know how to make your money and create even more money from it. That's what investing is all about. Investing is what you need. For example, how do you treat an extra $1,000? That's an achievement because most Americans cannot boast of an extra $1,000 during surging inflation. Do you spend that money on an additional useless gadget? Do you spend it with your girlfriend because you want her to praise you? The first thing a wise person would do with extra money is to invest it. Yes, you got me right. They would invest. But that doesn't mean you cannot spoil yourself once in a while. So let's assume you decided to invest that extra $1,000. What would you do with it? Should you put it into the stock market or cryptocurrencies? What stocks do you buy? Do you consider $1,000 too meager for investment capital? This video will answer all those questions and many more. Let me briefly give you an idea of how investing works. For example, imagine you inherited $300,000 from your parents. You could buy yourself an awesome, cool Ferrari, one of the most luxurious cars. Everyone would know that you have finally made some money. But how successful would you be with that? Think about how much it would cost to maintain a Ferrari. Now I guess you must decide that would be an unwise option. But what about you investing the money? Let's say you bought real estate for a cool $300,000 and then rented it out. You would be receiving $2,000 every month as a paycheck. That would be cool as your money is now making more for you. If you did that for 10 years, you'd have gained double your initial capital and still have your asset, the real estate. After such a long time, the value of the real estate would even appreciate. That's even more awesome. If you decide you no longer need the real estate, you can sell it. You would get back your initial money plus whatever gains it has made. Over the years, you were also getting paychecks from the real estate. Unfortunately, we're talking here about how you'd invest $1,000. It cannot even buy you real estate. But that doesn't mean it cannot be invested in. You don't need to have a fat bank account to start investing. I will show you how you can invest $1,000 and make it grow. I'd appreciate it if you could take a moment to hit the like button. Your support will enable me to continue producing such useful content. If you have already liked my video and subscribed to my channel, that's awesome. Thank you. Now, let's get back to the video. The simplest way to invest $1,000 is to deposit it in a savings account in the bank. It would generate 1.5% every year in interest. Do you wonder how the bank can pay you that interest? They lend your money to borrowers at a higher interest rate, and you get a portion of the profit. But there is a problem with this simple strategy. This is because a savings account's 1.5% interest rate is meager. So it's not worth it. For example, let's illustrate that with a calculation. If you deposited $1,000 in a bank for 1 year, at the end of the year, you would have an interest of $15. That means, in total, you would have $1,015 in your bank account. Now compare that to the present inflation rate. The inflation rate in the United States is currently 8.6%. With such a high inflation rate, your deposit in a savings account has depreciated at the end of 1 year. Therefore, it will buy you less, and you will be poorer. Interest rates are low because the Fed wants to encourage borrowing. It was 0.5% in 2020 and only rose this year because inflation has increased. Even if interest rates on deposits rise again, they will not catch up with inflation. So, investing your money in a bank is out of the question. You might want to consider government bonds as a second option. The government issues securities such as bonds to raise money. The government uses the money to support spending. For example, the government usually needs money to build infrastructure like roads. What it does is issue an IOU. An IOU is like a debt statement. The government owes whoever owns it the amount on it plus interest. I believe you now get the point about government bonds. Interest rates and government bonds usually have an inverse relationship. When interest rates are rising, the yields on government bonds will fall. This year, interest rates have been rising, and the yields on government bonds have also fallen. This year, the yields on government bonds are between 2.86% and 3.5%. It depends on how long you want the government to hold your money. Considering what you get from a bank, bond rates are not that bad. Government bonds are popular. The risk on bonds issued by the government is either low or none. Since its existence, the government has not defaulted on its loans. The government can only default when the U.S. economy fails. That's why these bonds are considered the safest investments in the world. But you can get higher returns with another type of investment. With the stock market, you can get 10 or even 30% yields. For example, Marathon Oil Corporation's stock has risen by 35% this year. Chevron stock has increased by 23%. These figures are fantastic because we are in a recession. By the end of the year, Marathon Oil and Chevron shareholders would have about doubled their money. If the stock market can double people's money, why is everyone not putting their money in stocks? This is because they are counting the risks. Government bonds have little to no risk. Individual stocks have a risk that the company might not make a profit. It might even fail. When the news about a company's product is negative, investors begin to panic. That company's stock will then fall. That is why investors consider the risk and rewards before deciding on a stock. Marathon Oil and Chevron are well-established oil companies. As a result, their chances of failing are lower. But changing economic times might influence their profitability. Finally, it is all about understanding your risk profile. How much risk can you take? If $1,000 is your life savings, then be shy of high-risk investments. You might end up losing your money, but you can invest in an index. It minimizes the risk. The most famous index is the S&P 500. The S&P 500 comprises the 500 most capitalized U.S. companies. What the index does is invest in those stable companies. So when you invest in the S&P 500, you buy a share in these companies. But some do fail, mind you. The S&P 500's rates of return are high. It has been posting about 10% returns since 1920. Real quick, if you guys are enjoying this video, which I put a lot of time and energy into, I would really appreciate it if you guys tap the like button and make sure you subscribe with notification on. And if we get 2,000 likes on this video, I'll drop a brand new video next week about the same topic. Now, let's get back to the video. Some good index funds are the Vanguard 500 Index Fund, the Invesco QQQ ETF, and the Fidelity Zero Large Cap Index. These index funds are great, and they invest in the best companies in the S&P 500. Brokers sell shares of these index funds. You can find good brokers online. Brokers have been certified by the Securities and Exchange Commission (SEC) to sell these stocks. That makes me remember a famous film. It's about the Wolf of Wall Street. His job was to hoodwink people and sell them stocks that had no value. Thank God we're in 2022, and you can protect yourself with some research. Almost all brokerage firms have created an app you can use to buy shares. You can find these apps on the Play Store or App Store. One good example is Robinhood. It takes a minute to download the apps, sign up, and carry out an investment. With this video, you can start investing right away. My goal is to make it as simple as possible for you. I observe that when people start investing, they have many questions. They get discouraged after some time spent Googling for answers. They give up and try again after some months, or maybe never. So I did my best to answer all your questions in this video. Also, you can post your questions in the comment section. I will surely answer each one of them. Now, if you want to watch more videos like this, then you need to watch this video right here. This video is one of the best on this channel. You can click on this video to watch further.